Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of the Chicago soybean complex. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production, or recognition of any of these patterns, levels, analysis, or any related items on these, my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that, Chicago soybeans. There are now two patterns on this daily chart, one broken but seemingly repaired, and one not tested as yet, with a possible third new pattern possibly there, but not verified as yet. All three are bullish. The first, and still the main showrunner for this market since August last year, is the dark blue December 24 to August 25 bullish Andrews pitchfork. In late May, prices dipped down below the dark blue lower time, which is currently 1171 even, and stayed under it, though still close until the end of June when we shot back up again as a result of forming a small double bottom pattern, Eve and Adam type. The market's today in between the dark blue lower time below and the dark blue middle time overhead, and that's currently overhead at 1289 3/4. More on the double bottom shortly, but first I'd like to discuss the second pattern here now, and it is an early January to late June bright red bullish Andrews pitchfork, with a main feature on this pattern that none of the tines have been tested since it was formed. We are today in between the bright red middle tine overhead, currently at 1266.5, and the bright red lower tine below, and that's currently at 1134 1/4. The third pattern is highly speculative on my part, and is really a way of trying to quantify the rise seen since late June. It is a purple highlighted, quite acute, late June to date bull channel, currently 1200 to 1268 1/4. This bull channel is only a 3-pointer so far, and I'm quite prepared to retire it as soon as it starts looking suspect. Okay, so going back to the June-based double bottom pattern, we broke higher from this 2 weeks ago, easily reaching both the primary and secondary topside targets. However, over these past 2 weeks, prices have also started hesitating. And I was not sure if it was a topping action or a halfway hesitation. This week, that question was resolved with a gapping move up on Monday, making it a bullish halfway hesitation. Since then, prices have reached the primary target at 1228.5, today actually, and now have a secondary harder to reach target X up at 1267 3/4. What makes this interesting is that target is above the high so far of 2026 at 1238 3/4 and 1235, which is what we are testing right now, those levels. Today, the first of those highs. So I'm watching this market now with great interest. At the moment, we look like we have an indecisive doji cross at the top of the market. I'm not going to read any more than that into it. Chicago soybean meal. Much as soybeans themselves, there are two main patterns here for possible third new pattern here as well. However, this is where the similarity wears off. You see, yes, we do have an early January to mid-June bright red bullish Andrews pitchfork that has barely had the bright red lower tine tested at the start, which was back at 306, which is now currently at 306.10. And we have seen this week prices start to move up over the bright red middle tine, currently at 329 even. However, the second pattern is a reverse head and shoulders pattern made over mid-May to mid-July, and a pretty ugly looking one as well. Yesterday, prices formally broke up over this reverse head and shoulders pattern, utilizing the bright green neckline for this pattern, currently at 322.80, as a base. For this pattern, we now have a primary target X1 up in the 339.20 area, and a secondary harder to reach target X2 up at 349.5 area. Prices rising to these targets have some significant resistances to overcome, notably the 61.8% absolute Fibonacci line at 336.30, this year's high at 338.70, and reaching the next major high from October 24 up at 351.60. Then there is the recent late June to date action, which has elements of a possible bullish halfway hesitation, with a primary target already reached up in the 339.5 area, quarter area, 339.25 area, and a secondary hard to reach target X3 up in the 338.60 area, right on the high of this year. I shouldn't say a quarter, let's say 339.20 rather than 339.25 because it wouldn't be right. There we go. Thus making all very, very interesting. Then there is the possible but steep, unlikely, and my willing to retire it in a heartbeat situation because I lack confidence in it right now. Late June to date dark blue bull channel, currently 320.5 to 335.30. It is also only a 3-pointer, which only adds to its misery. So all in all, some pretty interesting bullish things going on, which leads me to my final point. And this commentary would not be complete without my discussing a portion of my commentary which I've repeated for 164 weeks. So for 3 years now. It is to do with the annual key reversal seen here at the end of 2023. I said back then, and I quote, "And I only need to remind you once again of my words when I pointed out the Chicago soybean meal was about to have that rarest of patterns, an annual key reversal down. This duly came about at the end of 2023. I've been living in the shadow of this pattern ever since." End of quote. I have also added ever since, and I quote, "If there is only one thing you take away from any of my musings, let it have been those words." End of quote. For 3 years, the shadow of that pattern has darkened the skyline of this market ever since. I wondered if prices were now finally sending that shadow off to oblivion. Maybe, just maybe, we are seeing the start of something. But please don't hold your breath, as we are still, with all these moves and possible topside targets achieved, still significantly below the close of 2023. Chicago soybean oil. There is one pattern here that has defined moves higher this year, even when it was being thoroughly tested. It is the bright pink March to August 2025 bullish Andrews pitchfork. The market today moving up towards the overhead bright pink upper tine, which is currently at 77.70. Whilst all this was happening, a more recent pattern emerged, a dark blue start of February to late June bullish shift pitchfork. The market today testing the dark blue middle tine above and pulling back down from it by the looks of it, and it's currently at 75.64. There is a third pattern here prompted by the action of soybeans and bean meal. It is a bright green late June to date bull channel, currently 73.66 to 77.42. In this third one, I do not have great confidence in this pattern and would retire it in a heartbeat if it was compromised. But for now, it continues to show the very recent bullish angle of attack. All this comes down to what I've been saying here for the past few months when I said, and I quote, "I think for this market, the question is not whether the market is bullish or not, but how bullish does this market choose to be?" End of quote. This is now the 9th week, and the bullish incentive has indeed seen some heavy dampening, but was not, still not, extinguished, and is seemingly coming once again back to the front. Thank you for watching and listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.